All right, good evening, everyone. We're down to 3 days until the general strike against Congress, where we, the people, can demand that they pass the blueprint for a better America immediately, if not sooner, and end poverty, end mass incarceration, and end the endless wars. You know, America has the ability to solve so many of these problems, but what we have is a failure of political will. Instead, we've been drawn into this constant partisan fighting, Republicans and Democrats pitting us against each other and dividing us. Divide and rule is an age-old strategy. But we can accomplish so much more when we come together as Americans, just like the framers did when they wrote the Constitution back in 1787. And they started off the Constitution with a preamble, that 52 words that outlined 5 duties for Americans. And so I'd like to start this meeting by reciting it. We, the people of the United States, in order to form a more perfect union, establish justice, ensure domestic tranquility, provide for the common defense, promote the general welfare, and secure the blessings of liberty to ourselves and our posterity, do ordain and establish this Constitution for the United States of America. Those are the 5 duties as Americans. We've already talked about how we can establish justice by ending mass incarceration, how we can ensure domestic tranquility, provide for the common defense, and tonight we are going to finish up Title 4 of the blueprint, promoting the general welfare. Now, this part is the part that has some taxes in it. Paying for one of the offsets, I should say, for universal basic income is a value-added tax. Now, this is not like one of the sexy issues in the blueprint for a better America. There's a lot of minutia about tax law and how exactly this would work. But these details are important. This is not just some nebulous soundbite that says, let's just do this thing. This is a very specific plan of action and a very specific demand that Congress put this on the president's desk. And so the purpose of these 21 days of live streams is to help the American people understand exactly how we can end poverty, end mass incarceration, and end the endless wars. So let us go ahead and get into the legislative package. All right. Where are we at? Let me talk about the findings and purpose real quick. And I will just go ahead and read those into the record. 1, Congress finds the following. The utilization of America's productive capacity has trended downward over the last 50 years as wages have not kept up with increases in productivity. The issuance of Treasury dollar bills will enable an increase in purchasing power and drive further economic development by bridging the gap between wage income and productive output. 2, issuing Treasury dollar bills in sufficient quantities to end poverty will free up additional resources that are currently being diverted to address problems spurred by poverty, such as crime, increased health care usage. However, these quantities may cause inflation beyond normal targets. Therefore, some of the increase should be taxed back or clawed back to remove it from circulation and fund government expenditures without borrowing money at interest. 3, wealth inequality distorts the marketplace and decreases the quality of life for citizens. A value-added tax, or VAT, is a consumption tax. Those who spend the most will pay the most. Combined with universal basic income, it is a progressive tax. 4, a 2011 report by the Congressional Research Service concluded the imposition of a VAT would cause a one-time increase in this country's price level, but a VAT would not necessarily affect this country's future rate of inflation if the Federal Reserve offset the contractionary effects of a VAT with a more expansionary monetary policy. 5, the United States is the only member country of the Organization for Economic Cooperation and Development, the OECD countries, that does not have a VAT. The purpose of the value-added tax is to address wealth inequality while clawing back some of the increase in the money supply. Now, this combination of UBI plus VAT was popularized by Andrew Yang's campaign for the Democratic presidential nomination in 2020. And because they work together. You start everybody off at the poverty law with universal basic income. You start everyone off with the same amount of money. And then as people spend money, they start to pay it back. So when people say that, oh, universal basic income shouldn't bother to give money to the Jeff Bezoses and Bill Gates and Elon Musks of the country, the value added tax captures that whatever that small percentage of their income that's coming from universal basic income, recaptures that plus more and make sure that it gets paid forward, because everything that we have in America has been built on everything that has come before, right? None of these people, none of these millionaires, billionaires, everything that they've built, Amazon, for example, right, could not have 2-day delivery and move things around the country without the interstate system or without the internet, without all these other inventions and things that have come before. And they found a new way to put it together and were able to establish dominance in the marketplace in order to be so successful. But now we need to make sure that is paid forward to enable other opportunities for other people, just the way that our parents and our grandparents paid for things like the interstate system. It's an investment in America's future. All right. So this subtitle establishes a 12% value added tax. And basically, we end up defining value as the difference between the raw inputs and the outputs. Now, in many cases, that's almost entirely human labor that creates the value. And so as we move forward in the 21st century and automation or AI is doing the exact same thing that a human is doing right now, if that same value will be taxed at that 12% rate. So there is no, so that the tax base stays the same, whether the human is doing these repetitive tasks or we get a computer to do them instead. However much companies mark up the difference between their raw inputs and their outputs, that is the value that's being created and will be taxed. Because traditionally we've done this through an income tax, right? When those workers would get their income, their wages, and then they'd pay tax on that. But that doesn't work so well when we switch over towards automation. I want to credit the source for a lot of this legislative language. It comes from HR 6110. This was legislation that was introduced by Paul Ryan in 2008 as part of a broad tax restructuring program. And his proposal set up a more traditional VAT as practiced in Europe, but this is a subtraction method VAT. So figure out how much you sold the products for, and then subtract the cost of the physical inputs, and then that's the difference that you pay on. So there is no tax on your receipt when you go shopping. It is a business tax that is paid with the expectation that the business will pass it on to you as a customer. But businesses can mix it up, right? If they want to sell things cheaply, loss leaders to get customers in the door, then maybe on some of those things, they only pass on 5% of the value added tax. And then the big luxury items, they pass on 15% of the value added tax. So it gives freedom to businesses to play around with their pricing, but at the end of the day, pay 12%. Pay 12%. because the more successful we are, then the more that we can contribute to ensuring that others have that same opportunity. That's what a good social contract it does. It spreads around equality of opportunity, equality of justice for all of its members. So, all right, I think that concludes my testimony on section 451. Okay. All right. So let's see. All right. Section 452 this is the meat of the value added tax. It is very lengthy. And I'm going to go through this. I'm going to jump around just a little bit as I do. No questions in the chat. It's got a total of 6 subchapters in it, each with and a total of 27 sections. So I'm going to go through each of those subchapters in order, but I'm going to jump around just a little bit in a couple of them because the definitions do a lot of heavy lifting. I took computer programming many years ago in high school, and the teacher told us that when we got really good, that we would write programs that were just a couple lines long, and we're like, what? He said, yeah, because those few lines are going to call up subroutines that are going to do all the work. And so the definitions are the subroutines that do a lot of the work, and the actual tax code is just a few lines long. So, all right, let me share my screen and we're going to get into this. We're going to try and move through this quickly. So if you have questions about the details, please put them in the chat and I will try and answer them. But again, I know taxes aren't necessarily a big, sexy topic. So we're going to blast through this. All right. Value added tax. All right. We've got these subchapters. And before we get into the definitions, let's scroll down to section 1602. All right. Very short and sweet here, to the point. A value-added tax is imposed on business activities in the United States by a business entity for each taxable year beginning January 1, 2024. So again, that date is after the Universal Basic Income, the American Union Jobs Program, goes into effect. The amount of the tax is 12% on the gross profits of the business entity. And then the last is, just the Secretary of the Treasury can do rules and regulations. All right, so let's scroll back and see what do those things mean. Business activities, business entity, gross profits. All right. Business activity includes the sale of property. What is property? Property is a product for purchase or sale, and does not include real property. That would be, I'm not sure if we got it defined in here. Does not include things like real estate, things like that. It means goods. Property is goods. Does not include real property unless specified or would clearly be applicable in a particular context. Okay, so business activity means the sale of property, the sale of services, the leasing of property, including real property. So if you're a property manager, you're a landlord or whatever, that counts. The development of property or services for subsequent sale or for use in producing property or services for subsequent sale, but does not include the performance of services by an employee for an employer, that is business entity, with respect to the activity in which the employee is engaged. So that's just employment. And casual or occasional sales of property used by an individual other than a business activity, such as the sale of an individual by an individual of a vehicle, things like that. Okay. So if you're selling goods or services, those are your business activities. A business entity is any of these legal associations or any other person engaging in business activity. An individual shall be considered a business entity only with respect to their business activities. And it does not include an entity whose taxable receipts for the taxable year are less than 3 times the basic wage. Remember, the basic wage is that $15,600 a year UBI that we start off with. So it's a $50,000 safe harbor. That if your gross receipts are less than that, then you don't have to pay the value-added tax. Business entity also does not include a governmental entity when carrying out essential government functions. So means the government could get into non-essential functions, selling souvenirs, gift shops, things like that. But basic everyday stuff is not a business entity. All right. Next thing we're going to add on gross profits. What are gross profits? Gross profits mean for a taxable year, that's a calendar year, of a business entity, which you know what that is, the amount by which the taxable receipts exceed the deductible amounts. So taxable receipts, what are all the things that the receipts? Those include all receipts from the sale of property or services performed in the United States. So any goods, any services that the business entity sells, those count as taxable receipts. A couple of details about games of chance. Those do not include any separately stated tax. So if your state has a sales tax and you make a business purchase, if your state has a sales tax and you sell something, the tax that you collect on it is not part of your taxable receipts. Performance of services shall be treated as the sale of services. So, and include, but not limited to, the permitting of use of property, including the rental of real estate, a performance for entertainment purposes, a presentation of ads or other advertising. Google, we're looking at you. Creating an obligation of the performance of service, and the making of a covenant not to compete or similar agreement to refrain from doing something. So those sorts of contracts or anything, those would count as taxable receipts. Taxable receipts do not include amounts received by an exporter. So if you're selling stuff outside the United States, it doesn't count. It is exempt from the value-added tax. To keep us competitive with the rest of the world, the value-added tax only applies for the business activities in the United States, with one exception. One exception is the exports that are subject to the Arms Control Act. So if you're selling bombs, you're selling other weapons of war that are subject to the Arms Control Act, then those are not exempt and you got to pay taxes on it. That makes us a little less competitive selling bombs to people. So be it. That's kind of the intention. All right. What else do we need to cover? And gross profits, do we cover that? Gross profits, taxable receipts minus deductible. Okay, well, yeah, what can you deduct? Deduct. Deductible amounts means the cost of business purchases, excluding any portion used to produce property or services whose sale is exempt from taxable receipts as an export. So any business purchases that you make are those are your business purchases are what you deduct. Business purchases include supplies, inventory, purchase of services from independent contractors, which have to be business entities, which means they have to make at least that safe harbor $48,600 a year. Purchase of financial services, imports of property or services. In the case of gambling and things like that, the amounts paid to winners, those count as business purchases, but they do not include compensation expenses for a individual other than as part of their business capacity. So your payroll taxes, your payroll is not a business purchase, is not deductible. Again, like I said at the beginning, whether you're adding value through human labor or automated labor or whatever, the tax base stays the same, that you still pay the 12% on whether it's a human or an automation doing the work. So payroll doesn't count. Purchase or rental of real property. If you feel like if you're a big company and to keep your profits down, you go out and buy a bunch of land and other assets to make it look like you didn't make any money. Sorry, that doesn't count. You cannot deduct those when calculating this tax. Purchase or rental of capital equipment, property acquired outside the United States, unless it's so. Services performed outside the United States, payments for money or capital, taxes, and expenses related to advertising. So if that is not a deductible expense, advertising. We're all tired of being bombarded with ads, and companies can still do that, but it is not a cost it is not an input into the cost of whatever they're selling. So, all right. I think that gives us a pretty good idea of how exactly the value added tax works. And so let's try and get through the rest of these. Tax exempt organizations. How does this apply to them? In general, they're exempt unless they've got unrelated business activity, such as, if you're a college and you set up concession stands at football games and things like that. If you're doing those sorts of activities, then those would be included. And the secretary will have extra regulations. All right. The next thing I want to talk about is section 1604. 1604 is the voluntary value sharing portion. And we hinted at this when we talked about universal basic income and the treasury dollar bills, that there was two ways that treasury dollar bills could be, stop share for a second. There's two ways that treasury dollar bills could come into existence. And the main one is issued as universal basic income to all citizens. So again, full shares for adults, 1/3 share for kids. Now, the voluntary value sharing, what it does is it allows any business entity to pay a higher than 12% of value added tax, with that extra money not going to the government, but being used to pay down the national debt and then being reissued as treasury dollar bills, sort of as a year-end bonus to all citizens in equal amounts, adults and kids alike, so that every citizen gets an equal share. And businesses can do this in a couple different ways. They can, let's see if I got this here. This also, it wouldn't go to guardians, just the citizens themselves. So we talked about kids, universal basic income, their payments get split between the two parents. Not in this case. Voluntary value sharing goes to each citizen individually. And so there's different reasons why companies would want to pay this extra money. One of them could be for public relations purposes, because all of this extra voluntary value sharing goes back to the American citizens. And so this is an opportunity for companies to give something back. If they have, we've seen this year, as companies have had record profits, windfall profits or whatever, they can give something back to the American people. They can do it as an apology, as reparations for harm that they have done. When they do something inappropriate, they can, kick in an extra $1 million or whatever and have it go to to pay down the debt and go to the American people. And so to greater incentivize companies to take advantage of this program, the Secretary of the Treasury will put out a report annually where they will rank the top. I'll go ahead and share my screen again. We'll go ahead and rank the top 200 companies in a couple of different categories, based on with the highest voluntary value sharing for the previous year in the following categories. By their percentage, whatever percentage over 12% they did, for entities with gross profits under 1 million, between 1 million and 100 million, and greater than or equal to 100 million. Now, if any business entities participating in this, if the number of business entities participating in a voluntary value sharing is less than 200 in any category, the Secretary shall fill the ranked list with the business entities reporting the highest gross profits and signify that the amount contributed to voluntary value sharing was 0. And so let's talk for just a second about what does that mean? How many companies do we have whose gross profits are greater than $100 million a year? And so this will be, you could even say there's maybe going to be a little, there's going to be some public pressure that the Secretary of the Treasury is going to publish a list of 200 companies. And if 200 of these companies who are bringing in $100 million a year in gross profits aren't giving anything back, then they're going to be listed in this report anyway with a big fat 0 next to their name. And so let these companies compete to be at the top of the list. Let these companies compete to give something back to the American people. Let these companies compete for the bragging rights of being number one. And yeah, so let Uber and Facebook and Google and Apple and all these other big giant companies try and compete to get the highest percentage of through voluntary value sharing. And the American people will benefit. Over time, we're going to pay down the national debt. And rather than take that money that's been borrowed into existence, rather than take it out of circulation, reissue it as Treasury dollar bills as a year-end bonus. The Secretary will report the sums for the previous fiscal year. The fiscal year ends on September 30th. And so in the middle of October, the Secretary will report the amount of sums that were collected in the previous fiscal year, and then shortly thereafter, issue all Americans their share of the voluntary value sharing. So that's the voluntary value sharing program. Again, since we're creating a public payment infrastructure, since we're upgrading our banking system, we are creating a new mechanism to a new mechanism for companies to do something for the American people. For the reasons that I stated, whether for public relations, whether as an apology, reparations, or just as a way of acknowledging that they made a whole bunch of extra money, and so sharing those profits with the American people. That's section 1604. All right, let's go ahead and burn through these next couple sections so we can get into my next favorite part, which is the tax on lawyers. But first, all right. Again, you can read all this in greater detail. The blueprint is published on the website. General accounting rules have businesses use the cash method of accounting unless they're exempt. Taxable year, as we said, is the calendar year in general. There's a few exemptions to do like a weekly kind of thing. Long-term contracts, basically whichever fiscal year you receive your payments for these long-term contracts, that's when you count them as a taxable receipt. Post-sale price and adjustments and refunds. If you have to refund some money in a later taxable year, then you can deduct that from your taxable receipts. And if you have bad debts and you write those off, but then you end up getting payment for them, then those then you go ahead and have to report them as taxable receipts. And so that is generally what we do for all these things. You can see that so as a transition rule, if anybody in a business entity has a taxable year that isn't the calendar year right now, they have a short taxable year ending on December 31st, 2023, and start a new one on January 24th. So if your business taxable year lines up with, for example, the federal fiscal year, then you'd have a fiscal year that runs from October 1st to December 31st, 2023, with the January 1st starting a new taxable year. All right, rules for financial services and products. Again, it's easy to think about how this applies to things like producing widgets or offering specific services. But we've got some special rules for financial services and financial products because they're a little less tangible, but they are very much included. So there's some definitions of what all those things are, how they are slightly different definitions for what are taxable receipts, how international matters are dealt with, some special rules for banks, and banks, special rules for insurance companies, financial pass-through entities, and that's what that subchapter does. Then we got our next section here is the import tax. Again, the value-added tax applies to American, sales, applies to the American economy. But what happens if things are being produced outside of the country and then we bring them in to the United States? The import tax is intended to make a level playing field. So it's a 12% import tax. There are exemptions for personal consumption. So if you're bringing things in for yourself, then you don't have to pay the markup. But if you're bringing things in for a business, for resale or whatever, then you have to pay that markup just the same way as you would be paying that 12% tax being passed through from a business entity in the United States. So we're going to keep American businesses competitive. All right, so yeah, so that's for imported property. Imported services, that's, if you're hiring subcontractors in Asia or wherever else, doing call centers, doing programming, whatever for you, that you would pay that 12%, a 12% import tax on their services. You'd pay that 12% if you could, same way that if that for those same people, if you hired them in the United States, you'd pay 12% on their payroll. And so you still pay the 12% on the payroll for the people outside of the United States when you export their services in. Let's see, international transportation services. If you're, when you're exporting goods, those costs to export something, the transportation costs, are not taxable. Flights to inside and outside of the United States, we set up a process where that can be simplified, and the Secretary of Treasury can make a rule that says, all right, international flights, 50% is deductible. Otherwise, it's the point of origin that counts. Likewise, if you're making phone calls and you're using the services in the United States, then that counts as being in the United States. Insurance, if you're insured with Lloyd's of London or something like that, then that's an import, and you pay a tax on premiums, but not on any benefits that you collect. And if you're insuring someone outside of the country, then that's an export. There's no tax on the premiums that they send to you, but any payments that you make to them do not count as business expenses either. They wouldn't be deductible. And then with banking services, that's section 637. It basically says it's complicated, and the Secretary of the Treasury is going to make specific rules. Last, we've got subsection, subchapter E. Let me just share the screen again real quick here. So yeah, so we covered imposition of tax on imported property, imported services, import-export of services, international transportation, international communications, insurance, and banking services. And then we've got subchapter E, is the rules for administrative administration, paperwork, and stuff like that. Returns and due dates, that clarifies what existing rules apply, including for individuals. 1642 deals with consolidated returns. So if you're a business that has many legal entities, you can consolidate all of your returns. You just have to be consistent about how you treat all the intercompany stuff. 1643 clarifies that the seller is liable for paying the value-added tax, because they're the ones who are receiving the money. And just like the income tax, they got to make quarterly or monthly deposits with the Internal Revenue Service. 1644, you got to notify the Secretary in case of tax liability changes. And 1645 is regulations, the authority for regulations. So a lot of this stuff, these regulations are covered in subtitle F. The blueprint does not update those, but sets a framework in place for the Secretary of the Treasury to propose updating those things. Let's see, anything else here? Secretary regulations. All right, section 453 is revisions to the code. Yeah. So the secretary has 1 year to propose changes to revise subtitles C through J of this code to reflect the amendments to subtitle A that we're making here. C through J includes subtitle F, but until those changes to subtitle F are made, in general, you just treat this value-added tax as if it were the corporate income tax, and business entities were corporations. Effective date is, again, January 1st, 2024. Special rules for businesses with 52, 53-week years. If you always do close out your business periods on a day of the week, the amendments made by the title shall apply to businesses with respect to its tax year beginning in the last week in December, except with respect to any transactions occurring during 2023 that were structured to take advantage of the application of this title to such businesses at a time when the title did not apply. So this is saying that there's no cheating with that 53-week year. You can't create a loophole, and can't create a loophole in between where some businesses are paying the value-added tax and others don't. It doesn't work that way. All right, that's the value-added tax. All right, and now we're going to move on to my next favorite part, which is the tax on lawyers. See if we can get through this in about 15 minutes. Section 461 is the findings and purpose. So here's the deal. In a July 2021 report, the Prison Policy Initiative concluded that, quote, one of the many reasons mass incarceration persists is because people too poor to afford their own lawyers are denied meaningful representation in court. This injustice happens because public defense systems, the systems tasked with providing attorneys to those in need, are severely underfunded and overburdened. All the time, we hear cases about people whose lawyers, public attorneys, public defenders did terrible jobs, and they're serving 10, 20, 30, 50, 60 years in prison. And we talked about in fixing the Prison Litigation Reform Act and fixing the Shin v. Ramirez decision. There's only so much we can do to try and remedy these things after the fact. But what we can do is try and prevent these things up front. That's the best way to establish justice, as the Constitution tells us we're supposed to do, is by making sure justice gets done first, so we don't have to fix it later. We've all heard of the Miranda rights. You've heard them on the TV shows and everything. You have a right to an attorney, or one will be provided for you. But this isn't, this was one of the things this came about from a 1963 Supreme Court ruling, Gideon versus Wainwright. And according to the website, Gideon at 50, 80% of criminal defendants require court-appointed attorneys. Let me say that again. 80% of criminal defendants require court-appointed attorneys. So the people, as Brian Stevenson has pointed out, that it is better to be rich and guilty, be in that 20% who can afford your own lawyer, than to be poor and innocent. And among that 80% who get a public attorney, there are a number of innocent people who end up convicted and incarcerated because they do not get the defense that the Supreme Court has ruled they should have as a constitutional right. So a lot of this depends on states. Some states provide minimal or no state public funds for public defenders. Sometimes it's on the counties. And that means that the poorest counties, where, again, that you're going to have the highest percentage of individuals who need public defense, those poorest counties have the smallest resources to provide for public defenders. Sometimes the incentives are wrong, like a flat fee per case. So if you're a lawyer and you're assigned to be a public defender, and the court says, all right, you're going to get $1,000 for this. Doesn't matter whether you spend 1 hour on this case or you spend 1,000 hours on the case. Doesn't matter. It's $1,000. And so where's the incentive to do the proper due diligence for your client? Where's the incentive to do to make sure that they get the defense, to go talk to their alibi witnesses, to look at dig through all the evidence, to do all those things? So there was a pilot program in California, and they found in 2020 that just having a lawyer up front made it more likely for people to get bail. Because as we've talked about in the bail reform section, one of the, I would say by design, one of the purposes of keeping lots of people and denying them cash bail or using cash bail is to provide self-service convictions. Hold someone and say, sorry, you're too dangerous to be let go, but if you plead guilty to this lesser charge, then we'll let you go. You just sign on the dotted line. And it's those self-service convictions that prevent the judicial system from grinding to a halt. So making this section will help make sure that people get some legal representation right up front. And this will force prosecutors to take a long, hard look at which cases they actually want to bring and which cases aren't a good use of public resources. So I'll go ahead and read the findings into the record. The Congress finds the following. 1, members of the legal profession are trustees of the judicial system, officers of the court who serve on the front lines of establishing justice. And as guardians of legal knowledge, they have a duty to the public at large. But the injustice rampant in the judicial system demonstrates that as a group, they are failing in their duty to be stewards of justice. America must do better. Now, 2, over the last 35 years, lawyers have raised their fees at twice the rate of inflation. Rather than fully utilizing their productive capacity, they have chosen to increase their prices, correctly calculating that they can earn more money with fewer but higher paying customers with an inelastic demand for their services. 3, the decision to price many Americans out of the market for legal service has fallen heaviest on the people most likely to find themselves in need of legal knowledge and representation. Those below the poverty line are three times as likely to be arrested. And the prevalence of cash bail also negatively impacts their available resources for legal defense. 4, without a knowledgeable advocate to guide them, poor defendants find themselves, on average, serving longer sentences. This has led to a two-tiered system that makes a mockery of the phrase, with liberty and justice for all. Shakespeare famously suggested killing all the lawyers, which would even the playing field. But a preferable alternative is a fee and dividend model to address the issue. 5, this subtitle establishes a 12% excise tax on practitioners of legal services and distributes the collected fees as vouchers to anyone who is arrested. There are an estimated 1.3 million lawyers in the U.S., earning an average of $125,000 a year, which puts the potential amount of voucher dollars at upwards of $15 billion annually. 6, this should have 2 effects. First, by creating a supply of voucher dollars, a new market for legal services will be created, generating business opportunities for lawyers who would otherwise like to serve the community as stewards of justice, but are unable to generate sufficient revenue. Second, by providing prompt access to legal expertise for those who are involuntarily thrust into the legal system, justice will be promoted. 7, simple arrests can have cascading consequences. In 2015, Sandra Bland was arrested after a pretext stop. She was held for days because she could not afford bail $500 bail, and she missed starting her new job. Her body was discovered in her cell on July 13th. 8. Legal vouchers will not be redeemable for cash, but they will be transferable so that they could be donated to people in need of additional legal services. This will enable incarcerated people to seek funds for professional reevaluation of their legal situations. 9. The program director may suggest revenue thresholds where the voucher distribution could be expanded to provide resources to parties in non-criminal cases, including family court, small claims court, and other civil proceedings, where those who cannot afford legal representation are frequently denied justice. The purpose of this section is to cultivate justice by rebalancing the economic forces in the legal profession. How do we make the legal judicial system work better? By using a fee and dividend model, putting a fee on lawyers and a dividend to the people who need legal services. All right, let's see if we can blast through these last couple sections here in the next few minutes. Section 462 puts an excise tax on providers of legal services. This is a tax, a 12% tax on lawyers. The tax is paid by the customer. If you are an in-house counsel, then the tax would be paid by your employer. The tax would be paid by your employer based on your compensation. Employees of a tax-exempt organization, nonprofits, things like that, they are exempt. Presumably, they are already doing the public good. Also, for the public good, the tax shall not apply to purchases of legal services by any government agency or body, or to employees of any government body or agency. All right. With that 12% tax, Section 463 establishes a trust fund that puts all the money into this trust fund, and it can be only used for paying for the legal services grant program. All right, and this legal services grant program establishes a new office within the Office of Justice Programs, a program to be known as the Legal Services Grant Program, and they will their duties will be to set up a program in which qualified individual means any person arrested within the United States after January 1st, 2024, and any other person that the director may designate. And the program shall preemptively establish individual accounts for legal services grants, prepaid with $400, and issue vouchers to law enforcement agencies to be held on behalf of qualified individuals. They shall establish standards for law enforcement agencies to A, promptly distribute a voucher to any individual arrested by the agency. B, notify the legal services grant program of the account associated with the voucher provided, the name and birth date of the individual provided a voucher, and a summary of the charges, including the quantity of felonies and quantity of lesser charges, and the number of vouchers remaining in their possession. After that information is gathered, then the Legal Services Grant Program would update the account with the identifying information and increase the amount of the grant in the account as follows, so that it's the sum of $200 plus $400 for any felony and $200 for any lesser charge. So at a minimum, $400 for additional charges, more money is available. Now, this is not intended to replace the public defender program. This is intended to provide immediate legal access to legal knowledge immediately for all individuals arrested, to improve outcomes and better establish justice. These voucher redemption programs in general anyone who is paying the excise tax will be considered a participating provider unless they opt out. And the program will ensure prompt reimbursement to the participating providers without fees or charges for the value used by the account holder. They'll set up a website to allow people to search by zip code, check their account balances, make transfers to other accounts, and provide other information or functions. And shall establish a program by which persons other than qualified individuals may open an account to accept transfers from account holders, and this shall be accessible to incarcerated individuals. Again, we have at a minimum tens of thousands of wrongfully incarcerated Americans sitting behind bars right now. And so this program can be used to allow funds to be transferred for them to get their cases reevaluated. As far as these vouchers, no cash rebates. You can't cash it in. If you don't use them within 1 year, they expire. The money goes back into the trust fund. And these grants are not income. And so the Internal Revenue Code clarifies that these grants are not considered income. All right. That, I think, pretty much covers the rest of Title IV. And seeing no questions in the chat, I'm going to wrap things up. Just a quick update on my fast for peace. This is day 19, I think. My energy level's starting to fall. It's been, I got another 3 full days to go. So it's been 18 days and 8 hours since the last time I ate. My energy level's starting to fade a little bit. I'm noticing that. I'm really tired of drinking salty water to keep my electrolytes up. My weight's still at 176. I've lost 25 pounds in the last, since September 24th. But my mood, my spirit is good because I know that the American people have the power to de-escalate the 2022 midterms by refusing to fight, by refusing to take sides in this partisan battle between Republicans and Democrats, and instead coming together behind a clear set of demands available to candidates of both parties: end poverty and mass incarceration, and end the endless wars. Together, we can collectively bargain for a better social contract. Join the general strike in 3 days, and tune in tomorrow at 7 o'clock when we will cover Title V, preserving the blessings of liberty to ourselves and our posterity.